We are talking these stimulus measures today and how this will affect your portfolio, especially if you are in aviation stocks or thinking about them, and if you are in precious metals, because my guest today is an expert on both topics. He is Frank Holmes. He is the CEO of U.S. Global Investors. Frank, welcome to Stansberry Research. Welcome to my new show. It's been a long time. I've missed you. Good to see you.
Jake Strano, I miss you too, and it's great. I'm so happy for your new success.
Thank you. Thank you so much. Having a great time here and just trying to keep bringing on fantastic guests like yourself, Frank, who are experts on multiple segments and areas here. So I want to start by looking at aviation stocks because you are the man behind U.S. Global Jets ETF, which was an ETF that started as I kind of see it as that little engine that could. It was working within a small space, and all of a sudden this year, amongst the pandemic, has really blown up.
Yes, it has. It's unprecedented that it would have in value in the first week of March, and then for 71 days in a row, $1 billion comes into that ETF.
Crazy.
And it was 5 years ago. And remember, you did the interview with the launching from the New York Stock Exchange floor. And the big question was, I'm traveling with Global Resources, looking at gold mines all over the world. And I noticed that my flight options had halved and my price of my tickets had tripled. So someone's got to be making money. And I want to launch an ETF. So I did, and Jets has been a phenomenal success. It's now $1.5 billion.
That is a huge number, Frank. And first of all, that number is huge. And also the fact, I can't believe it was 5 years ago. That's scary in itself. I don't know where time goes. But when the pandemic first hit, you must have been worried, thinking, okay, here I am in aviation, and look at the sector.
I was just really in pain because I had to lay off employees. I went from losing money to losing a lot of money in a second.
Right.
And then all of a sudden now we're very, very profitable, and that's a wonderful excitement. And now we're looking to hire people. So
that's
it's
great.
A game changer. But what was the big difference was price discovery that came from millennials that were stuck at home. And what we found out was that they knew so much about the airlines and where to travel because they liked experiences. So they knew all the deals, and they were very knowledgeable. And on YouTube, it shocked me about some of these people that had 2 million subscribers. Another person that had 300,000 was 19 years old. So this is where I was a big learning curve. Something like 40,000 millennials alone, just from Robinhood, came in and bought Jets. And then Buffett makes his announcement, he's getting out, and all of a sudden, Jets surges 50%. So when they say millennials don't make any money at Robinhood, I have a different experience.
Wow, interesting indeed. And you mentioned Warren Buffett. He exited aviation, but entered gold, taking a stake in Barrick Gold. Did that surprise you?
Yes, but he was very clever because he isn't playing gold. It has to be gold production because he's always been so negative that gold doesn't change, etc. But Berkshire Hathaway also doesn't pay a dividend. So there's knock was gold doesn't pay a dividend. But for me, he's got to be very bullish on gold for companies like the Barracks to do so well. And they also have this magic word today for stocks, free cash flow yield. Gold stocks never bragged about this. This quarter ended will be a record free cash flow yield from the 88 global gold producers we follow.
So let's look a little closer at gold, Frank, because you have, especially, I want to say the past 2 years have had very big, bold, bullish calls on gold. You were talking $10,000 gold. Has anything changed since the last time we talked, which was, a little over 6 months ago now?
No, not at all. I see it as still $10,000 is very reasonable, rational way of thinking. I think shorter term is 4,000. Is very rational because if you look at this cycle compared to 2008, 2009, how the Federal Reserve's balance sheet expanded, gold went from 800 to 1,900 3 years later. So now it's not $3 trillion, it's going to be about $10 trillion to get this economy going in that direction. So one can easily forecast $4,000 an ounce. What's important is that the G20 finance ministers, they don't care who the political leader is, they have their own cartel and central bankers. And now it's all about synchronized money printing to fight COVID, to keep the global economy trading and alive. So real assets are exploding. Real estate in America is up 10% in the past year. So it's false news when they say the CPI number is a bad number because it's not 1.3% inflation, it's 8%.
So okay.
Go ahead.
So you're saying it's really 8% inflation?
Yes, yes. So if you use John Williams, the shallow stats, he does a phenomenal job. And he uses the algorithm, the model, the recipe that was in 1980 when gold hit 850 and silver hit $50 an ounce. That recipe, if applied today, inflation is running at 8%.
So if you were to expose yourself, and you do expose yourself to gold, obviously you have an ETF, but if I had to ask you, to choose between physical gold or the gold miners, where's the better play here?
Well, I've always advocated 50-50, 50%, 5% in bullion, 5% in gold stocks, quality gold stocks, which have that high margins, high gross margins, growing revenue per share growth, and cash flow. So my favorite have been the royalty companies.
Okay. Finally, Frank, I also want to talk to you about cryptos, because apart from aviation and precious metals, you also are an expert when it comes to cryptocurrencies, specifically Ethereum. I recently had many CEOs like Michael Saylor, Raoul Pal come on the show telling me that they're upping or moving a lot of their company's cash or their cash into Bitcoin, and feeling that Bitcoin will outperform gold 100%. When you hear this talk of Bitcoin versus gold, how do you feel? Because you're really, a hybrid and adopter of both.
Well, I think what's important with Bitcoin is an alternative asset class. And it has a huge following of young engineers around the world. There's like 10,000 nodes of these sort of geeks working on it. You're not getting 10,000 people like that focused on gold to the degree. But gold has been around for 5,000 years. And say, when is this going to totally replace the other? I find that difficult, because gold is the fourth most liquid asset class in the world. But what's going to, for me, that I look at Bitcoin, it's going to become like Andy Warhol art. It's just going to become valuable because there's a limited supply and more people are going to collect it. And that's why I think, yes, it can propel higher, but it's going to have much greater volatility. The volatility of Bitcoin on a daily basis or 10-day trading or an annual basis is 5 times greater than gold. So I think that's going to not go away, that volatility.
Well, okay, and that's the argument that pro-Bitcoin, folks will use, saying that there's only a certain amount of Bitcoin you can mine, whereas gold, you can keep mining gold and finding deposits. But, one of my counter arguments to that thought is, well, when's the last time we found that great big gold deposit? I know you're involved with a lot of miners. What are you hearing and seeing in terms of gold exploration and discoveries, Frank?
I think a lot of executives today are very focused on free cash flow yield, and that will attract a bigger audience of investors. The gold stock buyers is actually a smaller universe, until just recently Warren Buffett making the statement of taking a position in a gold producer. And I think what's going to happen is that as more companies show rising revenue per share, rising cash flow, a free cash flow yield, you will see non-gold investors buying these stocks. And we're seeing this year Franco-Nevada, Kirkland Lake showing up in the IBD growth stock top 50. Right. So I think that the gold stocks are the big way to make money in this cycle. There's better discipline with management. There's not dumb acquisitions. So from that end, I remain very bullish on these gold stocks. Buy on the dips. That's the real important part. And realize that gold stocks have a volatility daily of 3%. Non-event, go up or down 3%. So when you get down 6% a day or 5%, back up the truck.
So back up that track, Frank. So let me ask you, because I know you sit on a lot of boards of these mining companies. Do you feel that they've learned their lessons then from the last bull run? Are things different today? You say that they're more streamlined, cleaner. Is it different?
There's a huge difference. Yes, yes. And you didn't see 10 years ago, 12 years ago in their press releases saying they have a free cash flow. When it was at the BMO conference earlier this year, Barrick mentioned they have free cash flow. So did the CEO of Newmont. So Yamana does it on a regular basis now. So I do think they've got that discipline and they want to get a better valuation for deals. Now, gold is actually peak supply. I'm a big believer of that. There's no new technological breakthrough like the frackers had for oil, which was a game changer for the oil market. There's nothing like that for gold. So I think that we're going to continue to see gold trade higher. What, by the way, these Bitcoin people don't get, you need electricity. You can't wear your Bitcoin. 60% of gold demand is love, is jewelry. And it hasn't gone away. So in India, which is the second most populated country in the world, second biggest purchasing power parity now, are big consumers of gold jewelry. And I think that that's not going to go away. So I remain very bullish to gold as an asset class. I think if you use, which I mentioned earlier, John Williams statistics, if you applied that 1980 model, gold should be 7,000 a day. If you really looked at the inflationary numbers. So I think we're going through this sea change. We're in a secular bull market in gold. The 50 days above the 200-day. Gold can fall below the 50, doesn't really matter. As long as that 50 days above the 200-day, we're bullish.
Just one final thought, Frank. You know, we saw the news emerge that JP Morgan has to pay close to $1 billion in fines for manipulation in the precious metals markets. I think a lot of investors see that and think, you know, how can I win here? How can I make money if I'm up against that?
Well, it's those big days when they spoof and the spoofing was taking place. And what has happened over this past decade is that China's Shanghai market has become what was used to be the gold price taker to the gold price maker. And what the spoofing was then done was when China was on a holiday. So when they celebrate the first week of October or the Chinese New Year, all of a sudden the manipulation took place. That is probably your best buying opportunity when you see gold fall, that percentage using the futures market, that back up the truck again. You can be smarter than them. Once you know the DNA of volatility and you know their leverage and you know what has been going on, you can counterpunch it.
Okay, so you have to try and beat the system.
Outsmart these characters. But gold has done it. Done it
All
nice.
right. All right, Frank Holmes, always good insights. I always enjoy speaking with you. Come back on the show, please.
Well, thank you very much. And it's lovely seeing you. And big hugs.
Big hugs, Frank. Thank you so much. And thank you for watching. We will have much more for you, so be sure to stay tuned. You can follow us in the meantime on all our social media channels and platforms. We're on Facebook, Instagram, Twitter, LinkedIn. We're all there. Thanks for watching. I'm Daniela Cambone.